What's going on, guys? So a very bloody Monday. The Triple Q's ETF was down 4.5%. At one point in time, we were a little bit lower than that, closer to 5%. With that being said, we did close at $275.41. Currently in the after hours, we're up just a tad. Don't pay that too much mind. With that all being said, the NASDAQ futures were down over 500 points on today's session. So this is a very aggressive day. Now, if we can just kind of rewind, go back to last week, we go back at least 3 to 4 days. You remember when things were choppy? The range was contracting. You were having a hard time, buying stocks long, having a hard time shorting stocks. Felt like there was no follow through. That's back here. We had that 7, 8, 9 day on some certain stocks, that kind of just consolidation. We could never really push past on the triple Qs, getting over that 314 area to push into the 50-day moving average. And the longer we spent in distribution, there's always going to be a big move. Now, whether that big move is an explosive move to the upside or to the downside, it's going to be very explosive. The longer a stock or an ETF goes sideways, when it does finally start to lose either its demand zone or starts to reclaim some levels of supply, it's going to be very aggressive. We're coming off of two back-to-back gap downs ever since we closed below this formation here on the distribution. That price that we started to gap down from was that $300 area here, kind of filled that mini gap that we had from May the 26th into the 27th. We filled that here, and then we've just been on a 1-2 day gap down. Now, at one point in time, whenever that is, we will dead cat rally. These gaps will get filled at one point in time. Even if we did try to come up to the 5-day moving average or 20-day moving average, that's only going to put us at a price of around $300, $301. That would fill these gaps. And even with that being said, that doesn't mean that the selling is over. We could definitely chop around and then continue lower. So just kind of want to point out those few things. Realistically, on the daily time frame, we don't have any levels of support, so I kind of have to rewind and take a look at the weekly chart as well as the monthly chart. So if we just kind of see where we stand here, obviously coming off these all-time highs of 408, this is back in November of 2021. Obviously, we know that we've been in a lot of extreme pain in 2022, and things do not seem to be getting any better anytime soon. Okay, so all-time highs, let's just kind of throw that out the window now. I think a lot of times, I've seen on green days or green weeks, a lot of traders think, hey, bottom's in, it's time to go, rally, everything's going to be okay, we're going to go back to all-time highs. Not so fast. We're not going to go back to all-time highs. The stock market is in a very bad spot, and it's going to take some time before things get fixed and things get corrected. This is just my opinion, and I'm not a financial advisor. I'm not saying that we're not going to have green days or even green weeks or maybe even a green month. But what I'm saying is I don't think that the market is going to be normal, quote unquote, what is considered normal to the bull side for at least another 6 to 9 months. Okay. We're going to get aggressive rallies to the downside, followed by distribution, followed by, maybe a green week, followed by sideways action, followed by a leg down. It's just going to be very nasty. As far as having an opinion to when you should be dollar cost averaging into some positions is anyone's ball game. I mean, normally when you're going to average into a longer term position, you want to take levels at macro demand zones. The average on the triple Qs was somewhere around 287. Obviously down here at the 200-day EMA, this was another potential loading zone around 277. Obviously, as of now, this is a weekly time frame candle. We have not ended the week, so this can completely change. We could snap back, close somewhere in the range of around $290. But this technically would be an average down spot, and your next average down spot is going to be 262. What is the whole point that I'm trying to make here? Charts are very ugly. It doesn't matter who you're listening to or who's giving advice on Twitter or YouTube or social media. Realistically, if someone wasn't trading through the '08 kind of market crash that we had, as well as the dot-com bubble, no one has ever seen any of these things before. Not to this extreme and not for this long. Yes, we did have, the 2020 kind of COVID crash, but that was 3 weeks. It was 3 weeks. It was aggressive selling very, very quickly. Things immediately bottomed, and we V-shaped recovery into absolute all-time highs. This is a completely different scenario. It's not going to be like that. Even when we do come out of this, it's going to be a lot longer process and a slower process, and it's going to be, it's going to take some time. It's not going to be a quick recovery. It will, drag on. We have yet to make a bottom. So until we establish the bottom, we can't really be talking about a recovery. The way it sits right now, if I could just kind of put, an estimate or some sort of guess, I would imagine that the triple Qs at least come down here and test the 200-day simple moving average. Where it stands, this can reverse from here, but until we test the 200-day moving average, I really wouldn't try to put a stake of claim on anything. At this point, I feel like if you do have long accounts, you have a long portfolio, it's already pretty devastated. If you do have a long account, you probably at some point during this year have already dollar cost average down. It's not going to really make any sense to continue to dollar cost average in if we continue to make new lows. So until we can get a close on a weekly candle where we're taking out the previous week, maybe you're going to have to wait a little bit on that. Now, for day traders, we're going to make this very, very simple. Any loss of today's lows of 274, we do have room down, maximum potential of 263. Now, the best case scenario, something that we're going to want to see for tomorrow, is a gap open. If you get a big gap open and then a rejection on the first hour, you're looking for the continued flush. Now, here's scenario B. What we would be looking for is a gap down. If we get some sort of gap down and then we take out today's lows sometime between now and the after hour session or pre-market session or right off the bell, and then we lead into that FOMC meeting notes on Wednesday and go red to green, right? That would be the best case scenario. I think that right now it's time to kind of lock in, take profits a lot sooner, definitely size down. If you do happen to take a couple of trades and you end up green on the day, there's no harm, no foul in just taking your profits and kind of just sitting on your hands the rest of the day, getting outside and going to do something else. Right now is a very, very tough situation. I know that today looks very, very aggressive. We're down 4.5%. Everyone thinks that you could just go ahead and short this and make a shit ton of money. If it was that easy, everyone would be rich, right? Even in a market cycle like today, you're going to take profits too soon. Even in a market cycle like today, you're going to buy at a level of consolidation, and then it's going to bounce on you. You're going to get a little shaky, and then you're going to sell out for maybe a small loss. So even though the market is moving down the past 2 or 3 days, it's not that easy. Anyone who's going to sit here and tell you that it is easy, is not from this planet. It's not an easy market. If you're fortunate enough to kind of understand technical analysis and know what you're doing and walk away with some winning trades, then hey, more power to you. But what we're going through and experiencing right now is nothing that I've seen in the past 7 years that I've been trading, and I've been doing this for 5 years full time. I've been through my minor pullbacks, I've been through some corrections, minor corrections. This is nothing like what I've seen. When you have to go to a weekly or a monthly chart and go 2, 3, 4 years out to try to find the levels of support, it's not something that we deal with on a day in and day out basis here. So we kind of have to just pump our brakes a little bit, respect technical analysis. We need to not try to time the bottom. There's going to be some sectors that are going to get ready to start shorting. So with that being said, we have oil stocks and energy stocks continuing to surge. Some of the oil stocks, I'm just ZOM. I always go to ZOM. I had a little bit of a blow off top. Okay, had a little bit of a blow off top here. If we just kind of look back, going to what I'm trying to say, it's an absolute mess. Absolute destruction. If we kind of just go back to 6-8 here. And then we kind of look at 1, 2, 3 consecutive down days, down under 4.5%. We just lost the 20-day moving average. We do have room down to $90. I mean, even something like this on a swing play, I would try to play it for 85 even $77. Because when oil and energy stocks are the last ones to fall, they're going to fall pretty hard, being that they have ran all of 2022. I hope that makes a lot of sense. If you guys did like this video, make sure to like, comment, subscribe. Also join my Discord. All of my contact information can be found down in the description box below, and I'll see you guys all later.